When geopolitics explode, most investors freeze. Panic is a natural reaction, but in the markets, panic is expensive. Today, we're going to map out an 8-minute roadmap to navigate the storm. The immediate impact is always a dump of risk assets. Stocks fall, credit spreads widen, and liquidity disappears instantly. It is the moment of maximum uncertainty. If we look back, from World War II to the Gulf War, we see a pattern. A rapid drop followed by a recovery driven by government spending and economic adaptation. History doesn't repeat itself, but it often rhymes. Those who sold at the peak of panic in 1940 missed out on one of the greatest expansions in history. Time in the market usually beats timing the market. Let's talk about safety. Gold has been the ultimate haven for 3,000 years. In war, you aren't looking for growth, you're looking for preservation. Gold is the only asset that is not someone else's liability. Physical gold offers protection that digital assets cannot match in the face of a systemic collapse. However, physical gold ETFs are also liquid tools to adjust your portfolio quickly. Don't ignore silver and palladium. These metals have critical industrial components that often see their supply chain disrupted during conflicts, adding additional upward pressure to the price. War is essentially a struggle for resources. Energy is the front line. Oil and natural gas are not just fuels, they are geopolitical weapons that dictate global inflation. Investing in oil majors and energy infrastructure companies provides a natural hedge. When the price of fuel rises, these companies act as a buffer in your investment portfolio. It's cynical, but it's a financial reality. Defense spending skyrockets during wartime. The military-industrial complex receives long-term contracts that guarantee revenue for years, regardless of the general economy. Modern defense is technological. We're talking about satellites, drones, and encrypted communication systems. The companies leading these innovations become strategic assets for nations and for investors. In the 21st century, bullets are made of code. Cybersecurity is now an integral part of national defense. Companies that protect critical infrastructure against digital attacks are fundamental in any war portfolio. Spending on cyber protection is mandatory for governments and corporations. This creates inelastic demand that can sustain these companies' valuations even when the rest of the tech market suffers. Where do you keep your cash? In war, the US dollar and the Swiss franc usually strengthen. The Swiss franc, in particular, benefits from the nation's historical neutrality and banking strength. Moving capital to safe and stable jurisdictions is a key defensive tactic. Geographical diversification protects you against sanctions, capital controls, and the devaluation of local currencies in conflict zones. The biggest enemy on your trading screen isn't the market, it's you. Fear clouds judgment. Selling quality assets just because the news headline is terrifying is a recipe for long-term disaster. While the world screams, you must listen to the silence of the numbers. The most successful investors in history have been those capable of buying when there is blood in the streets, even if it's their own. Maintaining a healthy level of liquidity is your freedom. Cash gives you the option to buy undervalued assets when panic reaches its peak. Without liquidity, you're just a spectator of your own loss. Large tech and consumer companies with strong balance sheets are often unfairly punished by general sentiment. These are the moments where the fortunes of the next decade are built. Don't try to guess the bottom. No one can. Use dollar-cost averaging to enter in tranches. If the market continues to fall, your average purchase price improves. If it rebounds, you're already in. It's a win-win. Patience is a form of capital. Markets are mechanisms for transferring money from the impatient to the patient. In war, this maxim is multiplied by 10. Don't forget inflation-protected bonds, like TIPS in the United States. War is always inflationary due to debt and supply destruction. Protecting the real value of your money is vital. If you stay only in cash while governments print money to finance the conflict, you will be losing to inflation. You must be in real assets that capture that excess money supply. Real estate in stable jurisdictions away from conflict also acts as a store of value. Land cannot be printed, and buildings provide cash flow in strong currencies. These cities attract global capital in times of crisis. Indirectly investing in these markets through REITs or specialized funds adds another layer of security to your strategy. Bitcoin has been called digital gold. Its portability is unmatched if you have to cross borders. However, its volatility is still high. Use it as a small part of your extreme scenario insurance. The ability to move wealth through a simple seed phrase is a powerful innovation for personal sovereignty in conflict zones. But it must be done with solid technical knowledge to not lose everything. Review your stop losses. In war, market gaps are common. Don't blindly trust automatic orders if the market closes and opens with 10% drops. You need active vigilance. Being informed is not the same as being obsessed. Filter out the noise. 90% of what you hear in the news is entertainment designed to scare you. The other 10% is the data that moves your capital. Finally, remember that behind the charts are human lives. Investing intelligently doesn't mean losing your humanity. True wealth is the safety of your loved ones. Capital is just the tool to achieve it. Your investment strategy should serve your life, not the other way around. Secure your physical well-being first, then your financial one. A protected portfolio gives you the peace of mind to take care of what really matters. To recap, safe haven assets like gold, strategic sectors like energy and defense, geographical diversification into strong currencies, and above all, an iron psychology. That is your battle plan. The world will keep spinning. Crises pass, but quality assets remain. Prepare today so that when the storm clears, your wealth has not only survived but is stronger. If this 8-minute analysis has given you clarity amidst the chaos, give it a like and share this video with other investors who need a plan. Information is power. Thank you for your time and your trust. Stay safe, stay informed. I am the Investor I. See you in the next deep dive. Goodbye for now.